Ever feel like everyone else is in on some secret money-making scheme that you missed out on? Like they're all sipping pina coladas on a beach funded by their stock portfolio while you're, well, just trying to figure out where your paycheck disappeared to? You're not alone. The good news is the investing game isn't just for Wall Street gurus in fancy suits. Today, we're tackling the myth that you need a mountain of cash to start investing. Can you really turn $100 into a fortune? Stay tuned, because we're about to find out. Welcome to Money Theory, where finance meets real-life stories. We simplify money management, investing, and wealth-building concepts through engaging stories, experiences, and practical lessons you can apply in your life. From budgeting tips to investment strategies, each video teaches you how to handle money wisely while keeping you entertained and inspired. Today, we're diving into the world of investing for beginners. We're going to explore if starting with just $100 is actually a feasible path to building long-term wealth. We'll follow the journey of someone who started with a similar amount and see what lessons we can learn. So buckle up, grab your metaphorical calculator, and let's get started. Let me tell you about Tina. Tina was a high school history teacher, dedicated, passionate, but definitely not rolling in dough. She knew she needed to start investing for retirement, but frankly, after bills and the occasional splurge on a good book, she rarely had much left over. One day, she stumbled upon a personal finance blog that preached the power of compound interest and starting small. Inspired, Tina decided to commit $100 a month to investing. Now, $100 might not sound like much, but here's the magic. Compound interest. Imagine planting a tiny seed that grows into a giant oak tree. Compound interest is like that, but for your money. It's earning interest on your interest. So, not only does your initial $100 earn interest, but the interest earned also starts earning interest. It's a snowball effect, and it's the key to long-term wealth building. Tina wasn't a stock market whiz. She didn't spend hours glued to financial news. She knew she needed a simple, low-cost way to invest. After doing some research, she decided to invest in a low-cost S&P 500 index fund. An S&P 500 index fund is basically a basket of the 500 largest companies in the US. It's a diversified way to invest in the overall market. It's like buying a little piece of all the big players, Apple, Microsoft, Amazon, you name it. And because it's passively managed, the fees are usually super low. Tina wasn't immune to market fluctuations. There were times when the market dipped and her portfolio value went down. She felt the urge to panic, to sell everything and run for the hills. But she remembered the advice she'd read. Investing is a marathon, not a sprint. This is crucial. The market will go up and down. That's normal. It's part of the game. The key is to stay consistent. Don't panic. Sell when things get tough. And remember your long-term goals. Tina kept investing her $100 every month, rain or shine. Sometimes she skipped that extra latte or brown-bagged her lunch to make sure she had the money. Over 30 years, Tina consistently invested $100 a month in her S&P 500 index fund. Now let's fast forward to the end. After 30 years, thanks to the power of compound interest and consistent investing, Tina's initial $100 a month investment had grown into, drum roll please, over $250,000. That's $250,000. Now that's just one example, and market returns aren't guaranteed. Past performance is not indicative of future results, but Tina's story illustrates the power of starting small, being consistent, and leveraging compound interest. Now I want to add a little nuance about diversification. Tina invested in an S&P 500 index fund, which is great for beginners, but as you learn more about investing, consider diversifying your portfolio further. This means spreading your money across different types of investments, like stocks, bonds, real estate, and even commodities. Diversification helps to reduce risk because if one investment performs poorly, the others can help to offset those losses. Fractional shares.
Many brokerage apps now allow you to buy fractional shares of expensive stocks like Tesla or Google. So instead of buying a whole share for hundreds or thousands of dollars, you can buy a fraction of a share for just $100. ETFs, exchange-traded funds. As we mentioned, ETFs are like baskets of stocks or bonds that track a specific index or sector. They're a great way to diversify your portfolio with a small amount of money. Robo-advisors. Robo-advisors are automated investment platforms that use algorithms to build and manage your portfolio. They typically have low fees and are a good option for beginners who want hands-off investing. Examples include Betterment and Wealthfront. Remember to do your research before investing in anything. Read reviews, compare fees, and understand the risks involved. Don't just blindly follow what some random person on the internet tells you. Key takeaways. Let's recap the key takeaways from Tina's story and our beginner's guide. Start small, start now. Don't wait until you have a ton of money to start investing. Even $100 can make a difference. Consistency is key. Invest regularly, even if it's just a small amount each month. The power of compound interest works best over the long term. Don't panic. Sell, the market will fluctuate. Stay the course and don't make emotional decisions based on short-term market movements. Diversify your portfolio. Spread your money across different types of investments to reduce risk. Do your research, understand what you're investing in, and don't just blindly follow the herd. So can you turn $100 into a fortune? It's not a guarantee, and it takes time and discipline. But Tina's story shows that it's definitely possible to build significant wealth by starting small, being consistent, and understanding the power of compound interest. Investing isn't just for the wealthy elite. It's a tool that anyone can use to build a better financial future. Now it's your turn. What are you waiting for? Don't let fear or a lack of funds hold you back. Take that first step, even if it's just researching different investment options. If you found this video helpful, give it a thumbs up and subscribe to Money Theory for more practical advice on money management, investing, and wealth building. And don't forget to hit that notification bell so you don't miss out on our next video. Share this video with someone who needs to hear it. Thanks for watching, and remember, your financial future is in your hands. Start investing today, even if it's just with $100. You might be surprised at where it takes you.